All right, so we got the other chord, but the other chord is it's not as good. So let me see here. Put this over here. Let me load the pull this over here. Let's go to microphone. Let's see. Input volume. Should be very low. Let me see if I can change it here. Maybe? No? Yeah, it seems like this one is not as I don't know. Not as happy with this one. Can't hear it all except for a slight whisper. Yeah, that's what it's showing. I'm trying to raise it up more. Hold on, let me try this. Hold on. No, it wasn't that one. Let me see. Headset. Oh wait, hold on. Hold on.
Hello, hello, hello. Ooh, there we go. Let's bring this down a little so I don't kill you guys. Um, right there should be good. I think that's kind of where we put it. Yeah, it should be better now. It's up into like the top of the green, very, very bottom of the yellow. Yeah, it should be up in there. So, hold on one sec, guys. All right. All right. Have I been kidnapped? It shouldn't be muffled. Maybe it could be. I mean, like I said, this new cable isn't as good. I actually can't hear what it's saying. It should be louder though. Like I said, I don't know how delayed you guys are. My voice is kind of weird too. But yeah, it should be all the settings should be properties. Nope, that's good. It should be. I don't know. I think that's the best we're gonna get today. I've switched it everywhere I know at this point. I'll have to mess with it when it's offline. So yeah, I don't know. Like I said, it's the cable works, but it's not as good. I guess I don't know. I'm not necessarily happy with the cable. I'm gonna probably order one directly. All right. So got a little bit of movement. So all that dollar strength that we were seeing yesterday, now it sounds pretty close to normal. Yeah, I mean, as close. My voice is also not normal, Jeff, too. So that could also be adding to it. But like I said, this cable is not. I don't know. I'm getting like weird. I don't know. I'm not exactly sure how a sound cable could really affect it that much because there's not much that it's literally you're plugging from one end to the other one. But I seem like I'm getting some issues with it. I don't know. Like I said, this is it was going to take an extra time to get the actual legitimate one from Logitech, but yeah. So obviously yesterday, Powell blew up the dollar, pretty good. Again, we had seen all this strength, and yeah, he did provide fair balance. His fair balance was kind of to go against what the data was showing to try to hold it. Yeah, the market was looking for that, so I think Powell today is kind of like, whoops. Yeah, because we have, I mean, look at this, 331 pips in 24 hours in the dollar yen. That is a big move, right? That is a very big move. As well as that's coupled with, again, great pound data, right? Pound up 261 here, but even the euro pound, 81 is a good move, right? That's a good move. So, yeah, some big data. And again, today, Swiss came in as exactly as expected, and you're looking like, why is it down? Well, it's a dollar, right? First PAL, and then the data right here. And this is weird. The unemployment claims are lower than expected, but people are looking at this core PCE and like, look, it's going down. Now, Powell did make some comments about how, we're not going to hold off yet, but we're going to do the 50, which I think everybody pretty much assumed the 50. I was kind of surprised we got as big of movement as we did. It's already been moved away. But anyway, talking about the 50 and then holding the 50, he's like, it's not. Some of the comments he made were, I don't know, I think they were misunderstood. Basically talking about how 75, which again, I 100% agree with his statement about the 75. He's like, we're gonna control our increases a bit more. Yes, 75 was a high rate. That's higher than historically we've seen in rate environment raises. 75 is considered a lot, right? They were talking about front running with a big number, and they had to kind of step up to the 75. I agree, 75 is a big number. I always, in the past, we've always seen 0.25 raises or 0.5 raises, but so I agree. The 0.5 made sense. And again, if we do, he's like, it's the duration and where we end up. I don't know. I think they just, again, trying to take a little bit more control back and not go too crazy. It made sense, but the market really just hammered the dollar because of it. And then obviously today's data, they're like, whoop, here we go. And this is why we're dealing with these absolutely monstrous moves. So we'll see what manufacturing looks like. Again, manufacturing expected to be at 49. And you guys know about this one, right? Anything below 50 shows industry, or anything above 50 is industry expansion. Anything below is contraction. So, yeah, seeing some contraction there in manufacturing. And that's kind of what the expectation is. So, yeah, it's kind of an interesting kind of take on it, right? So we're going to get that in about 19 minutes, and we'll see kind of how that rolls out and what comes of that. But, yeah, interesting. And then tonight we got a bunch of data coming from the Asian session. We have BOJ speaking, we have Lowe speaking, as well as we have Orr speaking. So a bunch of, bunch of comments coming in this evening. So again, it's kind of an action-packed day, but again, we're after this 10 o'clock reading, we're pretty much done for the day as far as news releases coming in. It'll just be responses and kind of statements and things like that. So, overall, that's what we're dealing with. Tomorrow morning, we do have some CAD data. We got unemployment change, unemployment rate, and then tomorrow we have non-farm payroll. Now, the unemployment rate is expected to stay at 3.7, and this is one of those ones that's like, we're seeing the jobs numbers go up, but yet this unemployment rate is kind of holding at 3.7. So, they said that they needed to probably get it up into the 4.6 range before inflation would halt. It's not going there. Not going in the direction you would think. And then, obviously, the employment change number, that was disappointing. The ADP number on Wednesday was disappointing. Are we due for a disappointment here as well? So we'll see. Looks like Bowman. What is Bowman saying? I anticipate further rate hikes at upcoming meetings, so we still have a lot of work to do. But it's appropriate for us to slow down the pace of the increases. Yeah, I'm looking for signs that inflation has peaked and is heading downwards. I continue to watch labor markets accessions. They're still high. They're still high levels when you see action. All right. Terminal rate that I anticipated. That's what Powell said yesterday. There's nothing new. Yeah, exactly. And again, basically just go, instead of going 0.75, going 0.5. And then looking for, that it's peaking. But it's funny. Everybody else is like, oh, inflation has peaked already. But look, here it's like, it hasn't, right? That we're heading down. But we still have a lot of work to do. So, yeah, I mean, they're not wrong. They're not wrong. So, all right. So with that said, tomorrow is going to be, again, could be another impactful day with those non-farm numbers and the unemployment rate. Like I said, unemployment or, the employment rate is, and really the JOLTS jobs number is what was really driving a lot of this. That was not as expected. So, not the ideal situation. All right. Anything else? I don't think we have anything else. Next script. Not really. Unemployment weekly claims. Oil retreating. Yeah. White hazmat suited riot police. Yeah. Fun. All right. So there's the VIX. So VIX took a big smash down into that 2050 range. You may say, well, why? Well, it's because what Powell said, slowing things down, maybe not causing more of a recession or any faster pace. And again, that took a lot of pressure off. Overall, again, what we said is if he came with a very weak statement, expect the indices to rally. Because again, if you're not going to forcefully cause a recession. That's good for the overall indices. And overall, it didn't turn out bad. So again, big smash down again. And then since that time, obviously you can see it's down 0.05. It's not really showing much right now. It's really holding back down to the same levels. And again, this is, there's a gap down here, right? And we slam right into it. And that's kind of where we're at right now. So not much has necessarily changed as far as the VIX goes. And right now, I think the data and the statements we're seeing, again, right now we are seeing some positive movement in all the indices. And probably justified a little bit, right? I mean, again, the 0.5 is kind of confirmation of they are officially slowing down. That now that has been mentioned and other people are talking about it as well, kind of confirming it. So that's good because, again, it is certainty for the market. The market doesn't like the uncertainty of it. So kind of makes sense, right? Nothing earth-shattering there. We were getting a little bit of reprieve, but again, oil back up to 82.75. Not moving in the direction people want, and all these are up. Why? Because again, it's the weak dollar. Again, weaker dollar. What we've seen lately is, you get that weak dollar in there, and all the commodities go whoop. They go straight up, and yeah, that's kind of what we're seeing right now. So, not necessarily the best of what we want to see there. Now, all these charts are going to be skewed, and we marked off when this big data was coming in, and the reality of this was all this was kind of telltale, right? We saw a lot of, we saw some dollar strength coming up, a little bit of kind of whipsaw back and forth. And then again, about an hour beforehand, right at that lunchtime, we saw the push back down again. Now, we were kind of sitting in between and we were looking for an area where we could kind of take this one. And we were talking about kind of it being a dollar strong statement based off of what we had seen because we thought we were going to provide fair balance. And he did. He just provided fair balance off the data, not off what the market sentiment was. So, again, we did have the pullback kind of setting this one up, kind of cocking that hammer. And then, boom, he came out and then, bam, it slammed it higher. Now, we have had it move a little bit more today. But we can actually extend a lot of these over across now. We can take this one off because, again, that's not gonna hold up against a statement like that. And again, we were looking to sell from there, right? And it just didn't happen. Now in here, we did kind of get a Harry Potter trade. You can see it kind of came back and forth. So was a level that we could use for later on down the road. It is currently the 23.6 level right now. I would say areas to watch out for. The old level and kind of where we took off, right? The takeoff point ran out right now. Just happens to be right around the 50% retracement level. So I think that's one that we need to watch out for. And even the 78.6 now is kind of bracketed in. So, two good levels. Right now, I would say, everything we've heard, again, has the market fully absorbed the data from yesterday? Maybe. I would say we're probably due because, again, they are going to raise interest rates. It's less than what the expectation was. But is it weakness? Are they stopping? Are they done? No, that's not what they said. They just said that they're going to do it in more measured things, and they haven't said that this is going to be it. They haven't mentioned pausing. They just said we're going to kind of, not go at the vigorous pace, which again, 0.75 is 100% vigorous. So, overall, let's see. Let's pull some of these other ones off now. I don't need that. We can pull those off. Those are done. We're going to leave that, and let's see kind of what we're dealing with. Right now, we can see we are kind of in a racetrack. Now, there was an old level here, which is fine, but we're going to pull this. You know what? We're just going to extend this across. Let's pull it down just a little bit. We can refine it as we get closer. But right now, we are in a racetrack in the Aussie dollar. So not much else we can do with that. And you can see it's got, wait, is that the old one? Oh, that's fine. Yeah, I can pull that off. Pull that, pull that, pull that. Pull this. Right there. All right, so do a couple things here. I'm going to pull this up to here. Pull that out. Pull that out. I'm going to leave that on. Whoops. Sometimes it just moves and it's like, I just want to take it sideways. All right. So that's kind of what we're dealing with right now. Let's go to a 4 hour and see if, yeah, it's still the same. Still the same level. Clean some of these up. You go to 4 hour, you're like, whoop, you got a lot out. You got a lot out there. It's funny, you see 4 hour, you're like, holy crap, the price is all over the place. Yeah, it is. Nope, let me change that. All right, so that level holds. That's the next level we're looking for. Right. Let's put a number on that. Right there. 6906. 6906. So, not a horrible level, right? Not a bad level. Also, yen, as you can see, we were looking for this one to come up just a bit higher, and it turned and rolled on us. So yesterday we were talking about this one. We said that we were looking for, right? We said that we were looking for, some type of an entry. We didn't have it. We were looking for some type of a top. Unfortunately, that news was a little bit much for the yen. It didn't give us the top we were looking for. I mean, it did give us a failure to go higher, right? It did kind of pop, right? But this is such a huge candle, you can't draw a risk off of that one. And then late last night, again, this one just really turned and rolled. You can see the initial push yesterday morning. We made it through the PAL, kind of drove it higher, and it's like, oh, we're running right into those sellers, and then that's when it dropped. So, I'm not going to leak the 78, even though it's kind of, at this point, it's kind of canceled. We didn't push all the way up, so the reality is this is not really, let's see. It's kind of snuck in there. I was hoping we get a little bit more from that one, but I don't think we are. 1, 2, 3. I'm going to take it off. We can get a base in there and that can roll, but I don't know necessarily if I want to play with that one anymore. It's and it's not 50 is technically up here. This was done off the higher level, so it's not really the best. 940 tonight. Growth and inflation. 78. I don't think we're moving 78 from now till then. I'd like to find a new. I would like to find some type of a news position for this one later on tonight. But right now, I don't know if I really want to use that level. I think right now this one is just kind of, it's going to be relegated to the watch list. Again, we still have an alert down here when this thing comes and breaks through 92.13. I don't know when it will. I just know when it does. We do have an alert set on this one, and we be triggered, and then I think we take a short. I don't think it's going to happen before tonight, nor do I think tonight's news is going to drive it that far. It's a bit, a bit too far. It's 80-something pips away, so it's just going to be hard to be, to kind of get that one in. So, hoping we get more out of it. Yeah, I mean, there is a level here, absolutely. Again, it's not really a 50 retracement. It's actually, let's run this the other way. Let's run it from the top. Yeah, it's a little bit, you can see it right here. All right. It's not quite at a 50. It's a little bit of a front run, but it already has 3 hits in there. So, and then after that, it's kind of the racetrack up. So, I don't really like it. I'm kind of hoping it turns and rolls back down again, and we can get into 2 of these levels. If we can pull back down before news tonight, I think there would be the opportunity to take this one long. And again, they're going to talk about slowing, but inflation, growth. I think growth is always good. Whenever you mention growth, it tends to be good for the overall, the position. So, it's there. I don't know. I don't love it. I think the Aussie dollar is a little bit better right now. Euro dollar obviously taken off. All the comments have been weak. Makes absolute sense in this one. Again, we had such a huge move yesterday. Here was the push that we had down, and we had that 1030 reversal, put a new bottom in. Had you used that level, again, this is a failure to go lower. It came back up, and at 1230 actually is when it hit. Here's the big move forward, right? So, again, there was a 1 to 3 from yesterday. You can pull this one off. That fib's done. This fib will probably use this supply zone will probably use the top side of it. Let's run from here and see if any levels match up. Yeah, that's what I was hoping for. I'm going to say watch for a level there as a potential reversal. This one will probably come back down and bounce, but I'm more interested top side. Take that off. We can run this up. It's the same thing right now. It doesn't necessarily matter. 4 hour. Let's see here. Probably here. Like I said, we got a few touches off of it. We can pull that fib area out. Let's drag this across. I'm gonna mark it here, and then we'll refine it a little bit. Can I just do it right now? Yeah, we can do it a little bit, but it's not great. All right, there we go. Pull it all the way across. All right, so there's our next 4 hour level. Obviously, got some room to run on that one. About 75 pips. I mean, obviously within a daily ATR right now of that move. And again, if we can see all this, if we can see this, whoops, where's it going on? There you go. If we can see that move all the way up there, I think that could be a decent kind of turn and roll point. And again, maybe this is a non-farm payroll move coming in right here, right? If we can push up, non-farm leads us to, again, great number, then great. Could get a nice roll off of it. So again, that's where I'm looking for a top on this one. I'm not necessarily interested in much else besides that right now. And again, if we do get a pullback down, this could be another kind of push further. So, it's not bad, not horrible. There are better things out there, I think, right now. But again, obviously, Powell blowing this one up a little bit, and then the way the people are, understand the day today. I'd look for the next push all the way up here, and we'll put that right there. 1, 2, and 3. All right. That's weird. Lights just flickered. All right, you're a pound. All right. So you're a pound. We're talking about this level, and you can see, I mean, it just spent so much time in here. Bang, 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 bang. Overnight down. We ended up pushing through. Now, we ended up hitting it, bouncing, basing, and then coming back. So, I mean, it gave us a couple rallies through here, but it's officially out now. So let's see. We can take this and track it down a little bit more. You can see there is a level, and again, this was a profit target we're looking to hit. We did run through it. So again, on the short, the profit target was finally hit. Let's pull this. If this is a bottom, I would say that there is a short opportunity right here. Okay, that one is coming in at 86.11, right there. Okay. Sorry about that. Let's see. Right now, oops. Frame to those guys. There's going to be the next profit target. We talked about this area right here being an area of buyers, and that's exactly what it bounced off of. I'm going to put kind of a warning area in there. So we got buyers in here. There are buyers sitting in there. It's not really a great zone to pull a level off of. That's why I've kind of marked it the way that it is. Let me see. Maybe the lower time frame will give it to me a little bit better. Yeah, I guess. I think that's better. Better. Oops. Pull that and put it right there. All right, so right now, if you are short, look to take profit at 85.36. That level is going to be an area where buyers are stepping in. We've seen it in the past. They should come back in again this time. Am I willing to take a long off of it? Not really. It could reverse there, but it's going to have to give us the right kind of setup pattern. It's going to have to be a push down into that zone, a leave of it, and then a pull back to it, and then obviously, again, that gives us our established level of risk. So, I think right now there's not much we can do with it. Besides, it's already too deep in the short. And again, if we pull back again, if this is the bottom, we start to rally, then again, 86.12. But I think right now those are the two levels you watch out for. And again, this would be a hit, a pull back up, and then kind of a takeoff. That kind of like lightning bolt kind of push to the top side. So watch that one. Euro yen. Let's see. Euro yen, we talked about kind of the push back and forth. As you can see, we missed it by a little tiny bit, right? That was at 10 o'clock. I think we talked about this one yesterday. We missed this one by 7 pips, right? As you can see, the old Harry Potter here ended up working again, pulled back. It's there, right? It gave us the new near-term level, pull back, and then drop. So we'll remove them now. This basing level is out. Let's pull this all the way down. All right, so that's what we're sitting in right now. Okay. And again, it is kind of a 1030 reversal-ish type trade. Big push up. And again, this would be yen strength coming back into the market and obviously euro weakness. This is not bad. It is triggered. And 1 to 3 is right there, which is good because you're looking to take profit before. Really probably there. It's probably right on. Okay, so that's what we're looking at right now. So, all right, pound dollar. Pound dollar is kind of in the same scenario, right? We can run this all the way up. Not the end of the world. Again, we had the short yesterday. That alert was triggered. Pull that, pull that, pull that, pull that. We're going to move this down. Again, this is the same PAL thing. It's the same as the euro dollar, so or the Aussie dollar. I don't need to draw it again. It's the same takeoff point. Let's see. Right now, yeah, you can see this data has really blown through a lot. And again, we knew we had some weird levels here. These are all hit levels from in the past too. None of these are fresh. Curious. We are at a level now. Oof, I don't like this one either. One, 2, 3, and 4. There's a level here too, but it's not any better. I was hoping that it'd be a little bit nicer on this one, but it's not. Not a huge fan of that one. Yeah, not a huge fan of that one. Downside, we may have something there. There's nothing at the 68. This is about the only. It's about the only reprieve to the downside. Or like target to the downside. 120.70. It's probably due to retrace, but this is going to be a bit too much risk. Yeah, it's 43 pips. Again, this is coming from a 4-hour level. What I would say is if you're looking to get in the pound, I'm okay with a reversal in the pound right now. Like I said, we've had so much data. I think it's kind of at this point, it's, the trade is obviously done at this point. We've had a parabolic move in everything. We should be looking at profit taking coming into the market now. And overall, if we can get a failure to, if we can get a decent level put in, like right now, again, we just opened the candle and you can see it's already pretty volatile. But right now, if we close in this area, there's kind of your risk. You can see it cuts the risk in half. So it is a much better risk-based trade in that one. Yeah, that's kind of, yeah. I mean, we're kind of at a top. I don't like the level of risk. I'm not going to take 43 pips on this one. If you do, again, you're shooting for about 120 pips in the other direction. The ATR is 170, so it's not that it can't move. And it, again, if we can maintain and hold up here, then this looks better for the dollar kind of coming back tomorrow with non-farm data. As we get something kind of more bullish out of it. But right now, again, it looks like to me like it's trying to reverse. Again, we're seeing it in the euro dollar as well. We saw it in the Aussie dollar. They're all up there. Again, they're all parabolic moves up because of the news, and we're looking for profit taking to come back in. So there's something here. Is this going to be the top? Could be. But again, 43 pips worth of risk is a lot for kind of an intraday position on this one. So yeah. Yeah, it's all right. I'll put it this way. Pound yen. I mean, it's the same thing. If I copy and paste it, just put it here. So, same level we talked about yesterday. Again, we were down, and we said we can get back up there again. It's the same trade. So, obviously, your stop loss is a break even at this point. Nothing else we can do about it. By the way, European session open right here. Talked about 164.60. The low is 164.51. So he made that one by 9 pips, regardless of what broker you're at. You would have made that one. So, yeah. You're short. That's it. There's nothing else I can say. You should be short this one already. So pull that back down again. And yeah, look, right at the 61. So nice little match in that one. Right. Nice little match. This one actually, if you are short this one, you're probably safe to hold yourself down to about there, right? Probably safe to go right to about there, right where that base is. And again, if you want to do a couple different targets, that would be your profit target 1. Take profit target 2 down here. Say those would be your 2 profit targets. So I think you're fine on any of those 2. Dollar CAD. All right, dollar CAD technically is at 0.02, and we're playing ping pong. So yesterday, again, we had a little bit of a Harry Potter. We were sitting right about this, right? We saw this big push up again, and that ended up being the high. Again, it was a weird candle. We knew we already had a base there. And again, this was an old level. We'd talked about this level in the past. If you were taking it for a base, it would have been right there. That would have been your more near-term entry of it. And again, here's the Powell move, right? We saw it kind of push up a pre-move, and then he just slammed it back down again. And now all we're doing is basing between the 2 profit targets. We kind of came down, we kind of came back up again, we kind of came back down again. So we talked about this being an area. And again, mentioned that a lot of this is not really necessarily U.S. based. A lot of this is China based. But again, Powell's comments that we did get some dollar kind of influence on this one yesterday. It was big, not as much today, right? Not as much today, because right now, what are we seeing? We're seeing kind of oil step back in. We're seeing CAD strength come back into the market being up. But at the same time, there are buyers in this area that have been there before. So, yeah. So again, simple news trade from yesterday. We kind of hit it, failure to go higher. There was your confirmation in. It was an old level. And again, it wasn't the 23. You would have taken this reversal to the other side. Whoops. Right? It would have been down to here, and you can see it would have been right at a 50% retracement level. When it hit here, it had only been this low. So a base confirmation, 50% pullback, rallying up right before news, and right to the downside. Now it's kind of sitting here. And again, it's a little bit above. It's a level that I think we should watch out for, just because, again, the movement off of it was so good. But right now, we're literally bouncing back and forth between kind of the rock and a hard place. I think right now the next target really is going to be down here at 1. I don't think we can get down to 133. This is pretty ugly for tomorrow. Yeah, it's not that's not the nicest of drops. It's a lot of stuff to kind of chunk through, but from now till tomorrow. Could we? I don't really like any of the longs off of this one. If anything, I like more of the shorts. If anything, right now, I would say, again, this was the old profit target. I'll just remove that, change this one to white. There is a racetrack here. So maybe in preparation for tomorrow, we look for something along these lines. Again, this is a confirmation entry. This is not just this is not a number one, just, pull the trigger and go. You can see it only brings it to about half of the way through. So it's not even, what is it, 15 for 45? So not a horrible trade, right? And again, that level's already been tested. Typically, these kind of Harry Potter-based trades where we had an old level that was violated, whether you got in here or got in here, we knew we had enough room, and there really wasn't based off of these two confirmed levels. But the top side, there is, right? There is more room. So again, when it does come through, that's even one we can, what was I looking for? Ray. Oop, no, I was not looking for a ray. I was looking for this one, right? Change that green and throw an alert, right? So again, potential long trade there. Dollar Swiss. Again, why is dollar Swiss moving? Is it the Swiss? Nope, it's not the Swiss. All right, let's pull this and run this the other direction. Do the same exact thing. There's your high. There's your low. Actually, let's see. There's the PAL speech right here. Right. Actually, I guess kind of the 61 wasn't really a great level. It was all right. Let's run it all the way down now and see if anything pops. Yeah, this old level here. Look, the Harry Potter that came through this level. Level was violated, went down at base, it came back up, it touched, and then continued to drive down. So again, nice little Harry Potter there. And again, this was, had you taken this one long, again, it really with news driving it down, this was not necessarily a long base trade. But if you had taken it, you got stopped out on it. Again, you looked to reverse it again. It gave you all the confirmation for that momentum continuation, and it did. And now it went down and it's touching below the 94 mark. So, again, entry there, you're good either way. This bottom level, I don't need this now. We can take this one off. Again, we're going to leave the 94 on there, though. So same thinking on this one. I would be looking for some type of a reversal in this. Again, not that the Swiss came in at 0, which basically means they're done raising interest rates. We are going to raise interest rates again. It's just a little bit lower than the 0.75, which everybody took as weak. They are still going to raise it. So, with that said, I do think we look for some type of a bottom in the dollar Swiss and look to go long. If we can make it through, God forbid we get tomorrow, right? And again, I'm not a religious person. It's just a saying, guys, before anybody freaks out. If we can get more weakness tomorrow, I'd be willing to look for somewhat of a swing position next week in the dollar Swiss to the long side. Hopefully, again, maybe tomorrow it just kind of fizzles out and like the all PAL's information will be switched, but they are raising it again. There's no doubt about that. And the Swiss coming in at 0 could mean that they are done. That they are not going to continue to raise. So I do think we, on a fundamental basis, I do think we are in a position now where we start looking for dollar Swiss longs, particularly in swing-based trades. I think we're fine to do that with this pair. That just seems to be how this pair rolls. And dollar yen, not surprising at all here. You can see this one. It literally came back and it grabbed the 50. Right at 1030, we talked about an entry just a little bit above. We're looking for the confirmation here. Unfortunately, this one left without us, and look at that. It was a great turn point. It blew past the profit target. We came down. What did we do? We bounced off the 137. Look at that. We hit it right down here, right when Powell spoke. Actually, this is more end of day, but we bounced off of it and then continued to deteriorate. And then the overnight, obviously, we got the yen strength that was coming in that we saw in all the pairs. And we talked about this one, yen strength coming back in. Every single pair yesterday, we talked about it. Yen strength, yen strength. We saw it in the Aussie yen, the Euro yen, the pound yen. And from the 1030 miss yesterday, this is 435 pips. So, yeah, nice trade. Yeah. Again, this one peaked at 11:30. Or actually, I guess 10:30, right? Talk about a 10:30 reversal. We missed it by 7 pips. Yeah. So it happens. It happens. And again, remember, at that time, that was the low. It literally, and this just goes to show you that there are algorithms and things like that. We tend to rely on what we've seen and what we have confirmation for, but sometimes you get front run, and you get front run by things like this. And the front run came in. It didn't get to the 140. The front runners got us. So yeah, it's unfortunate, but that's the reality of it. It happens. So as of right now, I think it has more to go. I think 135 is probably on the cards for today. I think this continues to deteriorate down lower. I would be very interested to see kind of what 135 does, right? I think 135 could potentially be a bottom for this one. Going into non-farm tomorrow, we could potentially get something off this one, 135. But I want to see what the bottom looks like. I want to see a decent candle. Right now, there's nothing in here. As far as levels go, as far as additional shorts, there's nothing in there that really is earth-shattering. The best one right now is currently sitting right here, just below. And again, a failure to go higher. Posted up, came back down, kind of used that as a risk level, and it was off to the races. It is also currently, if this is the bottom, it is also currently sitting there as a 61.8, right? We're bisecting to 61.8. So if we take this and put this here, it's basically the same trade again. So, all right. But yeah, it's unfortunate when you miss it by just that little tiny bit. So right now, that's my favorite level in this one if we can rally back up. And it's sitting, I mean, again, it's quite a ways away right now. Not that we can't take a couple bounces, but right now, if this is the bottom, we start putting the bottom in for non-farm, and then we continue to raise up for non-farm. I definitely think it's a level you need to watch out for. And you saw this one literally turn on the 50% on the dime. 61 is a little bit in there, gives us a little bit of buffer, so we don't miss it a second time. All right. Now, cryptos. Cryptos are all down a little bit, right? Looks like Ethereum is down the most. And again, flirting with 1,300 came up and then has failed. TLT. Again, nice pop. Why? Because we got all the dollar weakness. Makes complete sense. Look, we were rallying back. All the data was great of his date, and then all of a sudden, bam, he went against the data and went with the market, right? So again, no one can ever say the guy is not into fair balance, right? No one can ever say that. CAD just is punching through. My phone just went off and it told us the alert was triggered. So with the CAD pumping through, for those of you, again, time to start watching the dollar CAD. We're looking for a push up. We're looking for somewhat of a base, maybe a candle or two, and then we're looking for a pullback again, and there is a trigger for a long, right? That's what we're kind of looking for right now. So it's in there. It's rallying back. It's finally broke through that zone. Again, we have nothing. It may actually bounce off of this level. So, yeah, we're kind of, there you go. It looks like we're coming live. Again, trade isn't triggered. We're waiting for it to come through. Let's go through commodities. Oil moving. And again, a lot of this oil comment, again, it is because of China. Where was the Chinese data over here? Down here? Right here. Yeah. Right. So again, the reason why oil is moving, I mean, there's a couple small reasons. Again, obviously the strategic reserve thing, but if China doesn't lock down, that was the biggest risk of oil currently was, well, what happens if, China, if they remove their lockdown policy, that means that demand doesn't deteriorate. Or if they did lock down, it was kind of like, well, all that demand is going to be destroyed. Well, they're removing some of the, the cards from the table. So with that, yeah, continuing to rise, as I think it should. And again, we talked about both these levels. This one had been hit a few times. We had bounced off of it. As you can see, 9 o'clock yesterday morning, we got a nice return off of it. And then what did it do? It came up, and again, it started the base in that same level. It's like, yeah, it's forming levels. It's going to break. Both these are going to break. And they did. So they're both broken now. We can take those out. There's plenty of trades that kind of went off of there at this point. The next level, and again, with that bottom being put in, we are getting close. And again, there's an old violated level there that we could have taken the trade off of. I think this is going to be a big level right where we're at right now. I don't want to call that this is the top for the day. And again, look at this. You can see we called our 3 and then broke, and it did. We'll pull those off. Let's just get these out right now. So this is the level that we're dealing with, okay? There's quite a lot of chop in there. It tried to kind of hiccup itself. Again, here's where the weekend gap was, right? There's a lot there, right? This is the U.S. Open. It's also a 50% retracement. We're kind of hitting it right now. We're coming to that 1030 mark. Remember, we had a huge down draw yesterday. Huge. A 12 was big, right? That data is now absorbed. I haven't heard any additional comments about supply, not supply. The last I heard was the Venezuela thing, that they're going to give money to Shell down there. And the profits that they use, we're going to use to pay back loans or whatever it was. I don't know. Again, state state-run or state-owned pipelines, I think, are a little dangerous. But anyway, I do think with oil right now, we are getting to a level where we should be seeing some type of reversal in this one. Other things that you can add in there too, looking like something, again, you guys know about Bollinger Bands. Looking at Bollinger Bands, you can see we kind of had that little pinch, right? You have the pinch, and again, this is what happens. This is in the overnight pinch. We've been riding the upper rail of this one. So we are kind of due to find some area of sellers coming in. I think we're in the right proximity, right? For reversal. Am I ready to call those to the top? It's pretty close. It's pretty close to the top, I think. And again, not because it deserves to go down, but it's, again, profit taking, right? Profit taking. So, again, if you guys are looking at what that level is, where that 50 is, it's coming in at 83.64, and we're about 60 cents off of it right now. So, just a little bit of a word of warning to that one. All right. Come on, you can delete it. There we go. Natural gas. So natural gas, we talked about really being stuck inside of a channel, right? Would you say that this is still stuck inside of the same channel? I would say yes. Okay. Hasn't really left yet. It is up. It looks like it's up 2.3%, but are we really? No, because if you draw a 50% mark right in the middle, we're kind of sitting. I mean, here, there's your 50% mark. We're still sitting right smack in the middle. We haven't really changed trajectories at all. So, got to watch out for it. Again, up 2.3%. I'd say I'm also bearish this one. I think bearish both energies would make sense. Would you say about 1970 would have been on a legit bear? I missed it because I didn't check until an hour later. Looking for Tokyo reversal, but they reached open. I don't know. Let me check real quick for you. At what, 7? What did you say? 19 in this area here? Yeah. I don't know if it's a zone, but yes, it was a pullback level. Let's see. You're saying here? I mean, there's the zone. Here's where the trigger would happen at the European Open. No, there's no zone there. No, it's a trend continuation. Yeah, I mean, it's similar to what a Harry Potter is, yes, but typically the Harry Potter, we add the extra element on there. We want to make sure it's a violated zone. It was not previously a zone. If anything, I would just say that this is kind of an overnight pause. But yes, it would have been. You could have traded this one for a momentum continuation trade, right? Here, I'll mark it off for you just real quick. Right? You could have said, hey, listen, there's the overnight. And again, it did, depending on what candle you used in there, typically you would have used the green in there, right? Because the green red boxes that one off completely, and it did touch. Most likely, I bet you that, yeah. So see right there, had you run the overnight kind of low, high to low, you would have looked at the zone and said, is this a zone that's worth taking? Yeah, it's right at that 23 pullback, right? So you would have been in. There's 305, so it's officially out. So again, you're stacking multiple things in there. So, but yeah, I mean, this is what you're dealing with. This was 9, right? And it's all right. Yeah. So, yeah. But yeah, not so much a Harry Potter, just a trend of continuation. You pulled back to a level of basing in a downtrend. And again, that's kind of like the master course. You talk about something being in a downtrend setup. Yeah, this was downtrend, and then kind of a pullback right there is what you're seeing. Let's see if you could actually see it with the 4 hour too. Yeah, so obviously a little bit harder because it was a peak over here. But again, at this time you would have seen nothing but red. You erase that one. You look at these two. Technically, this is an anchor break, right? This is not because again, if you remove the action and go to the anchor, you go across, you say, oh, we're kind of in an uptrend, right? We hit the other candle over here. Sort of, yeah. But once it broke through, it was an anchor break. You're looking for short trades, which kind of resets everything. And then when you drop down to the 30-minute, you could say, well, wait a second. We are definitely inside of a downtrend, and then we got to pull back here. So that's where it kind of came in at. Actually, the what? The 37.50 low from Monday violated on Wednesday. This? You're saying this low for Monday? But where was the pullback? Right? This is the pattern you're looking for. You didn't get it. Now you could say that there is a zone here, right? You could say that, sure, right? But again, drawing the original zone, you don't have anything to draw the zone off of. And if you look all the way back here, wasn't really a base, right? You can see that there wasn't really necessarily a base in there. But you could have and said, yes, you had one touch here, you had another touch here, you had another touch here. But the Harry Potter, what this would have done was it would have came down to here, and it would have went back again to here, and then gone lower, right? So you got the pattern, you just got the pattern here, not there. Yeah. So again, the European Open one would have been the nice one. But again, you would have had a couple different things in there. Yeah, it didn't give you the confirmation, right? So yeah, you can, and Jeff, in all honesty, yes, you can play, things like that. I mean, again, what we're typically using for the zones is when a zone is hit, one, we're good. One is typically like we're good or it's a confirmation, right? The second hit is our favorite hit because we have some type of a confirmation to show us that buyers are there. It's not a magical line, or we're not using the force, right? We have a confirmation that there were buyers or sellers there because it confirmed, right? Number 3 we can take, but it tends to get a little bit iffier. We tend not to use number 3 for Harry Potter-based trades. For regular reversals, yeah, you can use number 3s. Number 4s is where you tend to get your most breaks from. So, yes, if you hit a zone that many times, could you be aggressive, right? If you're fine with, taking losing trades to get more trades in, you could be more aggressive and take the break on number 4, but there are times where number 4 reverses back or whips through a little bit and gives us kind of a new zone in there. That's why we tend to want the reversal, the confirmation candle. Is it necessary? No, but it just depends on people's risk level. I'm not the take 8 million trade type person, right? Is there setups all day long? Sure, you could, but you're ideally looking for the top 2 or 3 that you want, right? Could you have taken that one? Would you have still been right more than 35% of the time? Sure, you could have. But ideally, you want the confirmation. And in this one, the confirmation technically came in at the European session, which, again, if you look to see what, stacking the odds in your favor, well, here you go. Here's the odds in your favor at that time. The 23.6 was sitting in a supply zone. It is giving us a pullback, and the European Open, whoops, come on, give me the thing, right? The European Open is, we use 3 o'clock as far as the opening window, is right there. So not only did it hit it at the European Open, which is a session reverse or a session kind of change time, we love that, but it was a 23.6 and it was a supply zone in a downtrend as it was pulling up. So downtrend set up into an area of supply at the 23.6 at a session open. See, there's a lot more odds in that one than right here. This is kind of the Asian session, right? It was an Asian session break, but there was never any pullback in there, so you're losing the ability to stack the odds in your favor. Ideally, you want to get as many odds in your favor as you can. So hopefully I didn't lose you on that one. If there's anybody in the channel that doesn't necessarily watch regular and know the strategies, I just recited so much stuff off that it may have gone completely over your head. But yeah, but basically we were looking for supply and demand, and then looking for confirmations with whether price action or with something like fibs, because again, not that we're necessarily a believer in the fib mentality, but because the general populace knows what fibs are, and it becomes a self-fulfilling prophecy, if that makes sense. So now that everybody's totally confused, but hopefully you understand now, Jeff. Definitely understand the latter much better odds. Yeah, it's all about odds. It's all about odds. And I hate to say odds, but at the end of the day, unless you have billions and billions of dollars and you can manipulate the market, it is odds. You just want to stack the odds in the same favor that the big money is. That's all it is. Okay. All right. Gold and silver. So gold, again, we mentioned this one could move if there was any weakness we were going to pop, and it did. It just took off. Like I said, I was really surprised. I didn't think Powell was going to, again, I know that he's like Mr. Fair Balance. I really thought he was going to fair balance the market, not because the data was there to justify it, but instead he fair balanced the data and let the market go crazy, which is kind of surprising because what he did tanked the market more than what the data did. And the data is what's real, his comments are just opinions and they're nothing more than that. It's just his opinion as of that moment in time, and trying to not provide market shock. He provided plenty of market shock. So, anyway, pushing up to 1800 is kind of where we're at right now. We can kind of reset a lot of the fibs on this one. Again, we can take this low to high and kind of bring it back up again. You can see right now around this 50% mark, there is some testing going on right about there. And we've kind of been down here and even a little bit of a front run on it. But right now, I would say if you are short, going with this 1800 reversal, which I think is a good idea, it looks like right now you should be taking profit around 1771. And that makes complete sense. It is at a 50. It is confirmed. This is a lot of movement very, very quick. Again, this is Mr. Powell blowing the markets up. Yeah, I think the market took it a little bit crazy, but at the same time, I'm kind of surprised he fair balanced the market sentiment. Or I'm kind of surprised he fair balanced the data, not the market sentiment, because the data is the data. You can't argue or change the data. So, yeah, little weird. Yeah. So anyway, I'm liking this one right now, and here's why. Like I said, I don't know if this is where the top is going to be, but if we do get a top sitting right there, and we can kind of pull back again, this could be leading us into tomorrow for non-farm payroll. So I like the idea of this being high. Again, I thought Powell would have done what I consider the right thing. He didn't. He kind of sided with what the market wanted to hear. It is what it is, right? But I do like it high. I do think, again, if that non-farm data comes in, and again, people are already expecting negative because we had the ADP data that was really crappy. I think this could be not a horrible short. And like I said, I am definitely, I don't think inflation is done. They said we have a lot of work to do still. They are still going to continue to battle inflation. So I think anytime we have a rise like this, I think it's pretty good. And right now you can see, too, the market's confused, right? Gold and silver, gold is up 1.5, silver's up 1.1. So, silver should be leading the way by kind of, 2 times plus. It's not even leading by 1 right now. So just shows you that there's kind of some indecision. And silver's already starting to turn back. If we run this back up again, it did go through. Look, here's that kind of confirmation back to 22. 23 didn't get hit. I like to see what we do the rest of today. I appreciate that. Yeah, good. Yeah, like you said, it's, we try to help clarify things. And again, Jeff, one of the two, I mean, one of my things is like that I'm always big on is like, yes, there are many ways to trade the markets. There's not one thing that is just hands down better than everything else. Don't use it. I like using the tools that I use because it meets my beliefs of the market. But then using tools that other people use, I love it. Again, some of those guys out there that I respect a lot, you see the number of trades that they take in a day, and I'm like, holy crap, you traded how much? Like, why did you need that many? Is just because that's their trading style. I'm not, I don't want to be married to the computer. I have too many other things going on. You see people with like 97 trades a day. It's like, why? Why do you need to trade 97 trades a day? Just couldn't do that. Just yeah. It's a lot. Right? So anyway, I think these two both reverse. You can see the silver's already starting to come back down again. I do think there's probably going to be some basing sitting right around the 22 mark. And again, we know that 22 will be a psychological level. Again, look at that. You marked it off. And this is an interesting one, too. We talked about Powell speaking, and what did the market do right before Powell spoke? It reversed at 11, 12 o'clock. It drove straight back down into a level that we had confirmation on, right? And again, that wasn't the 78. That wasn't a 61.8. At that time, it was a little bit deeper than a 23. But what did we knew that this was going to be a big area, a big time. I'll remove it, and you can see, look, pulled right back down into a level of basing and kind of that momentum continuation. So, yeah, we talked about that being big. And we'll leave that there right now because it is a 61.8. So, actually, it's funny. 61.8, 78.6 are all lining up. So, all right, let's look at the indices. Now, everything is deep in the red now. VIX, it's up a little bit. Let's see what the indices are doing. So, yeah, it looks like quite the trap this evening or this morning. So here's the overnight, right? There's your overnight level, and again, I push it really, really deep, so it tends not to qualify. Here's your opening print. You're kind of sitting up there. If anything, you were more looking for a short in this one, and you were kind of thinking trap. Here's why you're thinking trap. Here's the overnight high, and we talked about the trap in the past. There's your trap. right? As soon as this goes over the top, everybody and the brother knows that, hey, listen, we're breaking the overnight highs. Woo! That's it. Off to the races. It was a simple trap going higher. After this big, gigantic move, right, from yesterday, the parabolic move up, we're kind of looking for this to find a top and start to get short. And it kind of did that, right? Again, it gave us a top in the overnight session. Midnight, we literally pushed it right to the brink, and then we were sitting there and kind of breaking through it. At 8:30 actually broke through, so 9:30 was there. We were already kind of sitting at a high. It was basically in a short. I'm not going to draw a risk level on this one because it wasn't really a great risk level, but you had to be thinking, hey, listen, if this goes below, it's a short for the day, and that's how it turned out. This is a bull trap. There's no other explanation really needed. It is literally the example of a bull trap. Everybody missed it. Anybody that missed the opportunity yesterday was like, I got to get in today. And now you're like, wait a second, why is it going down? Powell made all those comments that it's going to be good, right? We're great. Well, it's because everybody is trying to get short. Okay. So no opening print today. It would not have qualified for it. It was actually already above the over top. And again, when we're doing that, we're looking for shorts on the morning or potential pullbacks to a level of buyers. But again, parabolic move, we were looking for a retracement anyway. NQ also looks very, very similar. Here's your top in the overnight, and you can see here's the 8:30 news candle. Kind of punched it through. You're like, yeah, no, not so much. And then again, 9:30, everybody that's like, oh, God, this is great. They bought it, and immediately what happened? Here, I'll put down 15. Here's your 9:30. I got to get in. I'm missing out. Boom, right up. And within a half hour, 10 o'clock, all those people now are getting stopped out to the downside. Okay. Has the momentum changed? No. But again, it's down 0.47 for the day. Or from where we were. It's basically been straight down, right? There is probably a little Harry Potter level in here as well if you're looking for it. It's going to be sitting right there. There's still a bit of a racetrack to go on this one. But again, because of the same rationale, again, it was breaking through the highs in the overnight. At 8:30, kind of news spiked it higher. Did not qualify for any opening print strategies whatsoever. All right. And you can see here the 1 to 3 as well within that range. YM, same thinking. Look at this. It pushed right above 8:30 and then kind of failed. You're like, oh yeah, it's going down. Didn't really give us the pullback, but you had to be thinking the same thing. It was going to be a short. Not much to say, right? It's the same kind of setup. I wouldn't say it's great. Don't love it. This one is probably more. And again, YM is the weakest right now of everything. There's kind of what you're looking at right now, right there. Yeah. There's your official. I was looking at with the Dow. I was like, oh, yeah, we had the ISM number. There's the ISM number. Official contraction. Wah, wah, wah. That's that recession talk, right? That's a recession talk. So the recession, the dollar should have, it popped a little bit. Little bit, but not too much. Pull this back down. Russell. Yeah, Russell should have been bad too. And again, Russell has the same thing. The impulse, boom. Level sitting right there. And if we can get a bounce off that one now, we'll be good. So that short is out from yesterday. It doesn't. I was hoping it was going to line up, but it doesn't. So, and the worst part about this one, and this is going to be me and my soapbox. Look at this candle right here. This 9:30 candle. The 9:30 is the super ugly one right here, where literally it went all the way up, went all the way down, and then opened and closed in the same exact spot. And it's a 15-minute chart. So technically, 15 minutes, it did nothing. Like, talk about ugly. Talk about indecision, right? How do we whip as many people out of this one as we possibly can? That's what that candle is saying, right? It's horrible. It's absolutely horrible. So, yeah, yucky. So, as far as opening print goes, no, everything today was in bear trap territory, around bull trap territory. Everybody was looking for that new overnight highs with all the data and the Fed and this and that, and all the indices are going down. And I think the reality is setting a little bit. So, whatever. It happens. Not every day is going to be a million, 4 trade setups. So this was not today. All right, let's go and do the drawing for today. So we know somebody, I'm not going to announce any names. Somebody is on a little bit of a streak, right? Somebody is on a little bit of a streak, a twofer going for a threefer, right? I got to say twofer and threefer because otherwise it's, we will get flagged as an adult program. That's not what I mean. So Let's see. Everybody in today? Let's see. Where is? Oh, there's Will. Will, I want to point out there was no Will and no Ernest yesterday. So Neuro was in like heaven yesterday. He's like, I can gain ground on everybody, right? So yeah, that's what we dealt with. So all right, closing it down. Let's see if somebody can do it for a third time. Winner is. Wow. I didn't even say her name. I'm just saying. Didn't even say her name. Neuro. I said those who would not be mentioned, and look at that. Look at that. See? I didn't even say anything, right? So I cannot be blamed today. I purposely did not say her name, but bam, that's number 3 for Marina. Look at that. Look at that. Give her 250, and then boom, right there. Cutting it down, man. Will, she's got like 300 points, Will, in the last couple days here. Yep, she hat-tricked it. Look at that. Natural gas came in. Kind of what the expectation was. What's natural gas doing now? Yeah. Expectation was there. So, bam. I know. It's crazy, Ernest. Look at that. See what happens? Oops, not 45. All right, so with that said, that is it for today. But tomorrow morning, you guys better be ready to go. Again, non-farm coming in. There could be a lot of movement. Again, remember, Friday, the goal is to be done by 11 o'clock, right? That is your goal. Is it going to be possible tomorrow? I think it very well could be with the non-farm numbers. The market is looking at these things, and it's like, ooh, what are we going to do, right? What are we going to do? Well, I think there could be some decent action tomorrow. So that non-farm number, I feel like non-farm right now, the expectation is that it's going to be a miss. I just, looking at it, it's kind of like, I don't think. I think this probably comes in, I don't know, 160. Again, wouldn't be great. I'm most curious about this unemployment rate tomorrow. That 3.7 coming in. If that drops to a 3.6, I think the markets are going to be very unhappy about it, and that's going to be like the good is bad, because then again, the Fed has everything they need to be like, oh, look at it, the labor situation is not fixed, right? We got problems with labor, when we know that, but that's what they need to rise. If it does go up to 3.8, like if this number comes in, at a 160 and this goes to a 3.8, the dollar is going to have a really, really ugly Friday. Dollar going to have a really ugly Friday. So, here you go. Fed in the 2-month core personal, That's right, year-over-year. Yeah. So, all right. So that's it. I'll catch you guys tomorrow morning, 9:30 a.m. Eastern Standard Time. Thank you guys for joining me today, and I'll catch you then. Safe trading, and I'll see you tomorrow.